Hey guys, I want to do a little bit of a on-chain analysis video today, and right now I'm looking at the Glassnode chart, and this is the Bitcoin balance on exchanges. This is a pretty important chart. I would say I would go so far as to say the most important chart in Bitcoin, just as far as one of the few on-chain metrics that has a very, very, very direct impact on price action. Maybe more acute the other way around. This one is showing, exchange balance generally in a trend to the downside. If you get on the lower time frames and see, maybe you go to exchange inflow volume right here. If you see a huge rush of Bitcoin flowing into exchanges, that those coins aren't going in there generally to create leverage long positions. That is direct sell side pressure going into the exchanges, and it's very important to keep an eye on that. Just in general, just to one of the few things of on-chain metrics to keep on your radar for short-term volatility. Because if you do see that inflow volume, you will see heavy sell pressure. But right now in the big picture, we don't see that. We actually see the opposite of that. So ever since the halving, well, not really the halving, but since the March 2020 event, we've seen a very sharp decrease in the BTC balances on the exchanges. And really, hit an inflection point right when price broke out right here. So you can see that, the balance is, getting really low as price is breaking out parabolically and up into that macro high in 2021. And then, has a little bit of a bounce as price does the opposite. So you can see how this is moving contrary to price, right? It's running down as price goes parabolic. It bounces as price goes down. And then it dips a little bit as price rises. So we have this, inverse nature here. And it's just continuing this very, very, very distinct downtrend in balances on exchanges. So maybe we'll just zoom in on that. And so here you can see I've marked it off on the left side where, the March 2020 event where it kind of peaked at the height of Bitcoin on exchanges. And then it sort of ran away. And we see this, it's just plummeting. I mean, from you have this brief dead cat bounce, so to speak, and then your continuation of the trend. And what this represents is Bitcoin being taken off the exchanges and sent to cold storage wallets. These are people who aren't leveraged. They don't have stop losses. They're not sellers. They're holding long term. So they don't really represent liquidity. They actually represent the opposite of liquidity. They represent the illiquid supply. And, of course, this is the type of thing that, it's a fundamental thing in the market. It takes a while to play out, but, it is one of those things that hits an inflection point, and you can get a scenario where, there's really just not a whole lot of supply held in liquid hands on the market. And that's when you get, your supply shock scenarios. And, that's really a characteristic feature of Bitcoin. It has this supply shock. If you go back and chart Bitcoin's, dramatic rises, it's actually kind of surprising to see how few days of the year they occur on. I mean, it's a very small percentage, maybe a dozen or two days represent the overwhelming majority of Bitcoin's price gains. So, over the period of a year or so, Bitcoin has these scenarios that play out very impulsively. And we know that. I mean, that's why a lot of us like Bitcoin and why we're drawn to the market is because of some of the, those face melting rallies, so to speak. And this is kind of the underlying fundamental supply and demand side that leads to those type of, parabolic events. Again, it's very difficult to use this information to, predict exactly when those will happen, but it's just kind of, lays a foundation so that, you can understand the rationale behind why those things occur and the type of environments to expect them to occur. And then, also on the flip side, the type of environments where they're just not likely to occur. So again, this trend represents Bitcoin moving from, what would be considered liquid supply holders into the hands of wallets that could be considered illiquid supply. And there's this interesting Twitter post I found. Some of the Glassnode data is very, very expensive. To get the professional level data feed, you need to pay $900 a month. It's a price I'm not really willing to pay for, but it is interesting to see some of these guys post stuff. You got this guy on Twitter posting Bitcoin by time held, and this breaks up the wallets into the time held. Basically, that means it tracks wallets that haven't moved Bitcoin at least out of the wallet for over a year, right? So maybe they're steadily accumulating and sending sending Bitcoin to the wallet, receiving deposits, but they haven't sent any Bitcoin from the wallet to an exchange or anything like that in a period of a year. And here you can see that, there's a very, very, very large accumulation phase, right? Um, you see this trend of what you see here is the long-term holders sold into this rally, right? So they've been holding for a long time. They have a very probably much lower cost basis. Maybe not, who knows? But they ended up selling this rally, and that's why you see this distribution pattern. But they're buying into this downtrend. You can see that, right? So price is declining, and as that's happening, the amount of Bitcoin, or at least the number of wallets with that have been inactive for over a year, is going parabolic, and directly contrary to price action. So that kind of reinforces the narrative that we were discussing earlier about Bitcoin being moved into illiquid hands, being held by these wallets that, are just generally can't be considered to be sellers, at least at the current prices. And they're more of long-term minded individuals, people holding with long time horizons. And, so this is really the environment in Bitcoin where, a lot of the retail players have been washed out. Maybe there's not so much interest on YouTube or at other social media. Things are kind of quiet in the market. And that's generally when, your bigger players are stepping into the market and accumulating. And then you can go onto the on-chain metrics and see that signature in the on-chain data. And that's kind of what we're looking at. So it's interesting to take a look at these type of things. It's not very relevant for day-to-day price action or, framing any kind of intraday, not even intraday, but short-term trade setup or entry or exit or anything like that. But it is interesting to look at on a fundamental level. If you're looking to accumulate a spot position, which I think everybody should be at least looking into or researching, this is kind of, where you do your research and, justify, just kind of look at the underlying market dynamics to say, okay, this is kind of the time to have exposure. And on the flip side, you could also use that to, determine times to reduce exposure, so to speak. Um, Another really good indicator to take a look at is the Bitcoin stock to flow deflection. Um, I won't touch on that in this video, but if you get a chance, go check out that video that we upload to the channel on Bitcoin stock to flow deflection. It kind of spells out similar information to what we're talking about in this one, and can give you a little bit of a basis to create an underlying spot position. Anyway, if you like the info in this video, please just make sure to like the video, subscribe to the channel, comment on the video, and I'll see you in the next